Massive surges, huge drop. It's been a wild week for Tesla, and it continues as the stock skids into bear market territory yesterday, posting some new highs earlier in the week. Today, though, shares back up almost 6% to 778. Where do we go from here? Joining us today, Ibrahim Alhusseini is the founder and CEO of Fullcycle and formerly an early investor in Tesla. Thanks for your time today. Good to see you.
Good morning, Carl. Good morning, everyone. Thanks for having me over on your show.
Do I have this right? You got in 08 in what was a Series E, I guess, at the time, and then got out in 13?
I did. Yep. I should have held on, but here we are.
So what do you tell someone who has owned it more recently, maybe has held, maybe has bought and liked it, bought and maybe this week bought and regretted it? What should the state of mind of a Tesla holder be right now?
Well, first let me start off by saying I have huge respect for Elon Musk and the company that he's built. So much so that I was an early purchaser of the Model X. My name's on the waiting list for the new Cybertruck and the Roadster, which I think are two of the most exciting car launches in history, probably. And with that said, I believe, as you know, that the stock is overvalued. The fundamentals don't support this north of $700 share value. So I believe there's a lot of hype, probably coming from retail investors, perhaps inexperienced retail investors caught up in a hype cycle. I don't know if you know this, but I checked it myself. There were rumors that if you type into the Google search engine,
not rumors.
Oh,
not rumors. Well, we showed it on our screen.
There you go. Well, I did the same thing, and that was surprising. So that tells you a lot right there. And as I said, the fundamentals don't support this price. Barclays has a price guidance of around $300 a share. Morgan Stanley estimates that the operating margin for Tesla is going to be, over the next decade, is going to be in line with Daimler and BMW at 8.3%. So I don't see why the price, the market cap of the company should be double what those two are.
So you think that price makes more sense, at least from a fundamental basis, when a number like 300 million? I mean, there's been so many different ways and so many different debates about how this company should be valued, whether it's an auto manufacturer, whether it's a tech company.
Well, here's the thing: is let's just talk about performance. Last year, their low estimates for deliveries was 420,000 car deliveries, and their high estimate was 600,000. They delivered 367,000 cars. So I personally believe the Tesla will continue to rise over time and may even reach this market cap one day. But I think today there is no justification for that, for this price on the stock, and I think it's, as you know, and historically, usually these hype cycles end up with a poor end for everybody who gets caught up in them.
Ibrahim, gotta ask, was your thinking similar when you sold in 2013?
I'm just a conservative investor in the sense that I had realized enough of a gain that I thought, I don't want to be greedy. This is enough of a profit margin. I was happy. I did really well on the stock. And I didn't see it reaching $700, that's for sure. That was surprising.
One of the talking points has been that Tesla is essentially the only way to play, at least from a large cap standpoint, the only way to pure play ESG and the notion of climate change. Given what you've invested in over the years, I wonder whether you think that's true, whether they have a monopoly or whether that's not the case.
It's very heartening that investors want to jump on the wagon of what you call ESG and the transition from a high carbon to a low carbon economy. I mean, that is a transition that will happen, and there will be a lot of wealth created in that transition. I've been investing in renewable energy and all of this domain of clean technologies because I know that the way we're headed, everything that underpins modern civilization has to get upgraded from the polluting and polluting technology that we're currently living under to the new clean world that we have to live within. So Tesla is one of the few stocks. There will be many more for investors to participate in over time. And yes, that's probably one of the factors that is buoying up the stock.
When you say there will be many more over time, it does make you wonder why the market's not giving any of Tesla's competitors credit or faith that they will be able to match their dominance even with the tide rising all boats.
I mean, there's a lot of competition coming online, even in the EV market alone. I don't know if you noticed, but the Super Bowl had 3 ads for electric vehicles. None of them were Tesla. And going back to what Morgan was talking about earlier, one of those ads was for an electric Hummer. You know that the world is changing when the poster child for gas guzzling excess goes 100% electric.
Lastly, I have to get your thoughts on ride-sharing companies, another area that you've invested in and exited as well. Uber after the bell. You've certainly been skeptical about the business models. This is a company that says that they're targeting adjusted EBITDA, basically being profitable in fiscal 2021. Do you think they can do it?
They'll only be able to do that if their food delivery service gets bigger, if their trucking service gets bigger. The ride-sharing service is a money loser, and like I said before, the only way they're going to get out of that is by stopping subsidizing all of these drivers by just purchasing Lyft. Because if they don't purchase Lyft, Waymo will probably purchase Lyft, and then they'll have an even bigger mess on their hands having to compete directly with Alphabet